should we change our policy stance? We do that at every meeting. And we look at where financial conditions are now, and we feel that they are appropriate for now. Anytime we feel like the economy could use stronger accommodation, we would be prepared to provide it.
Okay, ladies and gentlemen, welcome to this video. Today is the 16th of December 2020. It's 20:47 local time. This is euro dollar in our chart, trading 1.2161. We have the FOMC conference going on, as you can see, with the chairman still speaking. I just thought it's a good idea to just capture this market structure in euro dollar here, because as you can see, while this show is going on to the public, you know, the market price came down as it was expected, and then quickly did it move back up. Why? Here's your answer. You can see it on the y-axis with our tools, because there are too many short positions below the price. So even if afterwards the market comes down, that's the least they need to do. Yeah, and I've shown that many times and explained it many times. I call this pricing in the money positions. So basically those shorties, those dumb money shorties, were placed correctly in the market. So even though they had to do a move down in response to comments showing some dollar strength, they quickly took it back in order to make sure that nobody of them could quickly take profits or close positions. But they can't do it in an unlimited fashion neither, as I've explained before. But there's no rush, you see. So overall the market is rather neutral right now. If there are comments in either direction, they can use those to price in to do moves, but it will always be subject to the market structure. In this case, subject to those old dumb money shorties in the market, as you can see, and they use that to the maximum in terms of time and in terms of range, right? I've called it time and range principle. So if there's no reason to rush, they will not rush. And secondly, if they can exploit the range on both sides, they will do that, because remember, they need to clean out short-term stops on both sides. And by the way, something else I've explained before. So not only do they move the price against those dumb money positions, but also at the same time they lure new dumb money traders into the market. Yeah. So let's say, for example, they eventually want to push euro dollar down. If they go up and they paint in this pin, and you know, first of all they take out shorties with tight stops that were placed correctly, and secondly they get dumb money traders to buy, you know, this fake pattern, for example. Yeah. And then once the longies come into the market, which happens right now, some longies are coming in response to those kind of moves and fake momentum, then, you know, eventually they can switch the structure and go the other way. But as I said before, this is not a trade, this is just a live analysis, because you know, both scenarios are possible in such a situation. They can either retest the high 1.22 and take out the stop, or they can, you know, mess around and eventually go down. Both scenarios are possible here. What will happen depends on the dumb money flow of the next hours, easily 10 hours, whether longies or shorties come in, and how the stops will move, whether stops will be moved closer to the price. I'm not sure I will have time to capture that, because that will be during the night here, but I thought it's a good idea to also show that. It's not a trade per se. This time in this video I'm not even doing a prediction, but I just want to show you what's going on behind the curtains. Yeah. So while this is going on and people are distracted and come with all kinds of ludic fallacies, as Nassim Taleb calls it, making up explanations and stories for causalities in the market, yeah, and even if they're wrong, adjusting their narrative retrospectively, it's all noise. The reality is this here, okay? The reason why the price is staying here at 1.2162 while we're talking is this. You see? This red nest, as I call them. Because that's true support. That's not fake support, it's true support. These are actual shorties. So these are shorty positions of the dumb money. So if the price goes down, these guys get into a slight profit. You understand? While we have other situations where the patterns of fake support, fake resistance, which are targets. Well, the price. That's a different thing. But this is actual support resistance in terms of the money positions, accumulation of positions. Red representing the shorties, green representing the longies. Okay. Anyways, let me just try to capture a bit of the price action here while I'm explaining some things, and this gentleman is still talking live. 1.2166.
The first quarter will certainly show significant effects from this. At the same time, people are getting vaccinated now. They're getting vaccinated, and by the end of the first quarter into the second quarter, you're going to be seeing significant numbers of people vaccinated. And so then how will that play into economic activity? Again, we don't have any experience with this. You have to think that sometime in the middle of next year, you will see people feeling comfortable going out and engaging in a broader range of activities. And some people will be probably quick to do that. Some are doing it now without a vaccine, right, in many parts of the country. So nonetheless, my expectation, and I think many people have the expectation, that the second half of next year the economy should be performing strongly. We should be, we should be getting people back to work. Businesses should be reopening and that kind of thing. The issue is more the next 4 or 5 months. Getting through the next 4, 5, 6 months, that is key. And clearly there's going to be need for help there. And my sense and hope is that we'll be getting that.
Thank you. Gina Smialik.
Hi, Chair Powell. Thank you for taking your questions. I was wondering if you could...
Okay, just closed a little long scalp here, because often you can trade this kind of pricing in moves, like here buying while there's a shortiness just for a little move up. That's often what you can do. But that's advanced.
Fully healed. And so I guess I wonder, are you worried about valuation pressures there? And if so, what can the Fed do to contain those?
We monitor basically just about every asset price in the economy, and housing prices are something that we've been monitoring. And you see them moving up. You see very high demand. This is the housing market that people have been expecting since 2010, and then not many when the pandemic hit thought, oh, this is what will produce that housing market, but it has. Now, I would say from a financial stability standpoint, housing prices are not of a level of concern right now. That's just reflective of a lot of demand, and builders are going to bring forth supply. There's also a sense that some of this may be pent up demand from when the economy was closed, which would imply that demand, once that demand is met, that the real level of demand will be more manageable. So it's a healthy economy now. We met recently with a bunch of home builders, and many of them in the business 30, 40 years said they've never seen the likes of it. But no, housing prices themselves are not a financial stability concern at the moment. We will watch that carefully, but in the near term, I wouldn't think that that's an issue that we'd be concerned about.
Thank you. Edward Lawrence.
Thank you for the question, Mr. Chairman. So, with the actions that you've currently taken, how do you further fight a slowdown that you're seeing? We talked about the retail sales numbers are a little bit sluggish this month. The unemployment, the job growth has slowed down. Is there more the Fed can do to fight this, or is it now squarely?
Now, another thing I would like to explain why this is going on, and I've talked about this in an explicit video. So, the economic plausibility, the smart money algos use comments made by persons like the Fed chairman selectively. If you have observed and analyzed it, you will have come to the conclusion yourself that sometimes strong comments are priced in, while other times they're not priced in. And the reason is that basically they will, of course, do that subject to stops, positions, H4, etc. So in other words, obviously they will move, in this case, euro dollar, according to whether the statement is positive or negative for future interest rate changes. So whether the chairman is more dovish or not. Sometimes if the chairman makes direct comments on the economy, it can be that if he makes more optimistic statements, for example, this could lead to a strengthening in the dollar and vice versa. It depends. But either way, the important thing to understand is that the smart money is selective. If the dumb money's allocation and the market structure, the market causality allows for an economically plausible move, they will tend to rather do it, even exaggerate it. If the structure is placed correctly, they will rather not do that. You see? That's a very interesting game they're playing. I've made a video about that. If you go to my playlist, one of the first videos is about economic logic, economic plausibility, in context of the market manipulation. But it's all a rigged game. It should be really clear by now. This channel at this time is still small, which shows that it's kind of an open secret. It's a little secret that I'm doing this work here still with just like 1,000 subscribers, which is fine. It will probably grow if I, keep on doing this work here. But it's nice to see, and thank you for your feedback. Everyone who leaves a nice comment or sends a message or leaves a like, I really appreciate that. It motivates me, it motivates me to continue doing this work here. Most of the work I do is completely for free. Only if you want to have like your own access to the MK Web live stream and so on, then you have to subscribe. But yeah, the main part of my work here is accessible to anyone around the world for free, no matter where you are, no matter who you are. So please, it doesn't cost you anything to motivate me by sharing, subscribing, liking. So thanks for that in advance.
And how fast we'll
Speculating now on the vaccine, implying that if there would be a vaccine, maybe things could go back to normal, etc.
I'm not going to try to be precise because it's just another estimate. Our people are very good, but they're looking at the same data.
But as you can see, the price itself, doesn't really react much to all of that. It's all rather noise.
Normal set of assumptions, it could happen as soon as the middle of next year. In terms of the inflation, a couple things.
Okay, inflation, that's always more important.
I think you have to be honest with yourself about inflation these days. There are significant disinflationary pressures around the world, and there
These things
have
can be
been
important.
for a while, and they persist today. It's not going to be easy to have inflation move up, and it isn't going to be just a question. It's going to take some time. It took a long time to get inflation back to 2% in the last crisis, and we're honest with ourselves and with you in the SEP that even with the very high level of accommodation that we're providing both through low rates and very high levels of asset purchases, it will take some time because that's what we believe the underlying inflation dynamics are in our economy. And that's sort of one reason why we're concerned about inflation is that we see that, and that's why we have adopted the flexible average inflation targeting framework. That's why we're aiming for an overshoot, but we're honest with ourselves and with the public that it will take some time to get there. In terms of, would it really speed it up a lot to move asset purchases? I don't think that would really be. I think it's going to take a long time, however you do it. And we've been having very long expansions since in the last several decades because inflation has not. The old model was inflation would come along and the Fed would tighten and we'd have a recession. Now, inflation has been low, and we haven't had that dynamic, and the result has been 3 of the 4 longest expansions in modern history recorded.
There you see the pricing in of the shortiness.
We're thinking that this could be.
Should have tried to write it along a bit longer.
What we're saying is we're going to keep
That's inside bias.
policy highly accommodative until the expansion is well down the tracks, and we're not going to preemptively raise rates until we see inflation actually reaching 2% and being on track to.
If you want my personal opinion, I find those Federal Reserve conferences a bit of a circus. Most of those journalists you see there, they have absolutely no clue what's going on, believe it or not. Yet they act in a very arrogant manner and try to talk the talk, try to show they have an understanding of economics. Most of those people do not even remotely understand the fundamental mechanics of economics and financial markets. I can tell you that. I myself studied economics in depth, and I find that very laughable because, often they talk in a very arrogant tone and try to imply that they have a lot of knowledge. They don't. Not only do they not understand the most fundamental models of macroeconomics, they don't understand the manipulation that's going on. Because think about it, if that would be the case, right? Why are these guys not trading? If they have such a good understanding, oh yeah, inflation will be 2.5%. Oh, so what? Then go and make decisions on stocks, bonds, etc. You know what I mean? These are just talking heads. These people have no clue. And unfortunately, journalism these days is really such a low quality across the board. It's shocking, They're trying to make a good impression without having in-depth knowledge of all these complex topics. Of course, economics isn't complex topics, especially today. Our economies have fundamentally changed on many levels, including like in terms of, cryptocurrencies, digitalization, international trade. The internet, there are many factors of the last few decades which have changed everything and may have made some really traditional economic models completely invalid. Yes. Yet those people still talk in terms of old models, which have a very bad track record of predicting anything whatsoever. So, it's just a show, this whole thing. It's a complete show. And obviously, this is also, these journalists are selected who are able to ask questions to him and asking questions on some details if that would be very relevant. It shouldn't be that way. And you know what? On another note, if you take a more macro view, it's quite questionable whether this should be, look, if we are in our capitalist system, if we are based on free markets as the official explanation would be, then why do we have an organization that artificially determines the price for money, which is the interest rate, which is done by the Federal Reserve, which is not even publicly owned? Yes, it shouldn't be that way. It has been like that now for roughly 5 decades. Before that, the dollar was linked to gold, Bretton Woods, etc. But now, and since a few decades, we have this situation right here where a board discusses what the interest rate should be based on some macroeconomic factors and tries to predict the next macroeconomic data based on past macroeconomic data. I mean, think about that. Now, some of you will ask, okay, wait a second, how does this fit into the whole manipulation you're showing us since all these years? Well, of course, the central banks must be aware of the cartel price manipulation. Now, they're not necessarily interested in that because they don't care for the short-term movements, and they neither care for multi-hundred pip movements. They work on higher time frames. Now, there are situations where the smart money cartel will respect or even implement certain market moves based on central bank statements. It does exist, yeah. Now, it has become less and less important over the last years. But of course, central banks as such have not become less important. In fact, when you look at the equities and the stock market record highs of the recent weeks, this is to a large part driven by central bank market manipulation in other markets, right? Now you will say, well, look at Eurodollar and all the shorties, so it went up. Yes, of course. But it plays a role. And Eurodollar, together with stock indices, of course, play a role. Just to comment on that. Because some people have asked that before.
It's for now, I would say the real concern is, the real place to focus for me is supervision of financial institutions and then financial stability concerns. You can see a connection there. Monetary policy, maximum employment, stable prices. It's less obvious to me. I can make the argument, but it's less obvious to me that those should be first order things that we would look at in connection with climate change. But I think there's work to be done to understand the connection between climate change and the strength and resilience of financial markets and financial.
And you know, those conferences have followed a certain structure recently. They start with a statement. There are 2-3 questions on speculating how the chairman sees inflation, because that could show what they're going to do about interest rates. And then they open this Q&A, and they do like those questions which sometimes are really far out, talking about climate change or about COVID or whatever, or specific topics, the housing market, etc. Now, nice that we captured this up move here from the Dominic Shorty Nest. Okay, let's put down all this noise. Okay, so here you could see live during all this how the smart market priced in the Dominic Short accumulations, the short positions. We have a bit of longies coming in. That's why they're not keen to go up further. Of course, is a retest of the high with this big medium-term stop possible? Yeah. It doesn't need to happen, though. It's rather far and overstretched overall. If longies come in, they leave it. You know, they could actually attack the downside. It depends whether enough longies and big long accumulations come in, enough dominant buyers getting lured into buying like this formation, thinking, oh, it's a pin reversal up or something like that. That remains to be seen. You have to be very careful when we have this kind of situations where, you know, those fundamental events are going on and there are no stops near the price in terms of pips, and the bias is not strong enough. Remember, okay, like the ones who have subscribed, when you have access yourself, so skip any situations where there's no clear bias, okay? If you don't see clear bias in the market structure, obviously don't trade. Yeah, only trade if there's a clear constellation. I've demonstrated so many over the years, a few hundred. Yeah, remember I first had a channel where it was exclusively live trading. On this channel I've done a lot of other things. I've also done some live trades recently, but the idea is to have everything here. Recently I like to do those live capturing videos where I either do a prediction or I capture something interesting. I will try to do that as much as I can in terms of time, you know, allowing me to do so, because that's interesting and it allows everybody also to have an impression how these things move. Remember, I did the time-lapse video as well before, where you don't need to wait, but actually I think I recorded 40 hours and then speeded it up like 50 times. So yeah, of course, have a look at all of this. This Q&A will probably continue for another 15 minutes, I would say, something like that. And let's see what happens. Okay, I think that's enough for this video. I will stop it now and directly upload it. It's now 10 minutes past 9 local time here. So let me do that right away. Stay safe, everyone. Bye.